Hey guys, good morning everybody. Today is Thursday, October 30th. It is 6:24 right now. We got market opening up shortly in about 5 minutes. As you guys can see over here from the list, there's one entry that's coming up at there's one algo entry coming up at market open 6:29. Obviously, I'm not taking that one. The first target entry is going to be at 6:46. That's going to be the same one that we looked at yesterday. I mean, obviously, we'll see how market's moving when we get to that point, but that's going to be the next entry there. So we'll be looking for that here as price, continues to move along. But yeah, the first entry is going to be at 6:49. Um, we'll do an overall bias in a few. I'm gonna give it a few moments for people to make their way in. As you guys can see from the algo here, a lot less entries, right? A lot less entries, and that's not necessarily a bad thing, right? That means that the market here is starting to adapt with the new market conditions, right? Because if you look at our stats, here, let me see, I'll just kind of pull it up over here real quick. So if you guys are in the premium, I've been posting my trades pretty much every night before market open, right? So if you look over here, we start like earlier in the month, we had a lot of trades here available because this was all based off off the September data. So we had a lot of this stuff here. And then we're going into October, which is, we're going into a new season, right? Because, there's winter, there's spring, there's summer, there's fall, and we're going back into winter as we get close to the holidays. That's normal because market's not always going to be moving the same, right? Market's always kind of adjusting and adapting, and there's always other things happening in the world. So with that being the case, you can see there's not a lot of consistency with the market data. That's why there's less entries, which is not a bad thing. It's a good thing. We want less entries that are higher quality versus a lot of entries that are okay quality, right? There's going to be times where market's going to be high, sometimes the market's going to be low, but you just have to kind of work with what we've got. And this is what we got for the day. So we had a couple entries here to look at. I prefer this because there's more focus on, these specific entries. And we'll kind of just play by ear. So we'll see what happens here in a few. But as of now, yeah, as of now, I think we're good. So let me just make sure. I think there's like one hedge client that I have to add on to here right now. I'm just looking to add that client right now. But we'll do an overall analysis shortly. And then we'll wait for market open up here. So I'll know the direction of the breakout open in a few moments. It's not close enough to market open yet. I mean, we're getting there. It's currently 6:27. So in about a couple minutes, I'll be able to identify that that direction because I have to confirm the the momentum closer to the market open time. All right, just finishing this off. Guys, so yesterday, I talked to a lot of people, not just hedge fund clients, but in general, like people who are trading normally. I saw that there was like a lot of slippage with regard to the entry that was taken yesterday. So if you guys got hit with some slippage, whether you're a hedge fund client or a regular trader, don't worry, that was normal. I know it sucks that it happened to like some people and didn't happen as badly to others, but there was a lot of slippage yesterday um, with regard to people's accounts. So just keep that in mind. Slippage like that is going to happen, guys. There's no getting around it, unfortunately. Um, yeah, there's no getting around it, unfortunately. It's just, a lot of times there's going to be slippage, and unfortunately, we just have to kind of have to deal with it in a sense. So, I checked the wrong one. Yeah, so in the background, I'm just doing some stuff here with regard to the hedge fund clients. Market's gonna open up shortly, guys, in about 30 seconds. So looking at the breakout for today, if you guys are looking to take the breakout on open, let me go here real quick. It is going to be a sell entry. So if you guys are looking to take the entry here for the breakout on open, if that's the strategy that you guys are looking to take, it is going to be a sell entry. If you guys are looking to take the algo entry, it's actually the opposite. It's going to be a buy. So, this is going to be tricky depending on which one you guys want to take. If you want to take the original breakout, that's going to be the case. If you want to take the algo entry, it's actually a buy. So they're going to be going against each other. It's going to be tricky. Typically, I'd like this to be going in the same direction, but obviously it's not always going to be that case. So if you guys are taking the breakout on open right here, it is pushing up. And it looks like it has hit 50 points. So 50 points right there is hit. And it is pushing up higher. Again, I don't take the breakout on open, like I mentioned. You guys can see here, this is a big manipulated candle. I typically wait for the market here to kind of stabilize a little bit. So my next entry or my actual entry is going to be here at 646. So we got a few moments here. Well, not a few moments. We got a couple. We have a while. So there's no rush here. So I'll be waiting for this here to set up, and then once it's good, then we'll be looking for entry here. And I'll do an overall analysis of the market as well. I'm just kind of doing some stuff here in the background. That's why you see me looking at the other screen. Okay, so it looks good here. All right. All right, looks like we're good. I don't know if Nikki's on here. Yeah, Nikki, I'm setting your stuff up, just making sure everything is good to go, and it is good to go, so we're good. Yeah, I just realized that I had everything pre-set up already for you because we were waiting for your account, but
Connection lost.
see, I've been seeing a lot of well, you guys just heard my computer. I've been hearing a lot of connection loss lately. This isn't stuff I like to hear. It happens like a lot, like on the whole time. So like right now, 6:30, I hear it. At 7 o'clock, I hear it. 7:30, I hear it. I don't know what's the case, but there's typically connection lost around these times. Not a good thing though. We don't want that to happen. Anyways, let me go ahead and just switch this over to 646. So this is going to be the next entry, which is coming up, 646, right? So, all right, looking at 646 over here, this is going to be against momentum. So it has an overall probability of 61.11%. So depending on like whatever direction it goes, this specific point in time has an overall probability of 61.11. This shows that 11 out of the previous 18 entries have won, whether it's a buy or a sell. Now, this is where we really dig deep into it, right? So it shows here that for this specific entry, the cells here have a higher
Connection
probability.
lost.
And you can see over here, it has an 81.82% probability of it winning for cells. You can see it won 9 out of the previous 11 entries. That's a good sign. And then looking over here at the long positioning, it's only had about a 28.57% probability of it winning. So it only won 2 out of the previous 7 entries. So with that being the case, obviously we're going to be looking for a possible sell here at 646, right? It's based off the data, no technicals, no price action, none of that stuff. This is all based off the data here. So with that being against the momentum, what I'm going to be looking for here is I'm looking for price to kind of lose its steam here, right? It's pushing up very strong. I want to see it slow down a bit. And then as it slows down, I want to see it to reverse to the downside because we're looking for a sell here, of course, right? If this entry comes up for a buy, I'm not going to take it. I'm also not going to take it if the momentum pushing up is too strong, right? Because I'm not going to stand um, in front of a rising dagger, right? We discussed this yesterday. There's a falling dagger and there's a rising dagger. You don't want to be in the way of momentum. If momentum's pushing up, don't get in its way. You want to ride that momentum, right? So if this trade was with momentum, then okay, great. We have that rising dagger. I'm gonna ride that dagger to the upside. However, right here, I have it again. So I'm looking for this to turn around. And this is all based off the data, right? My algo provides the data here. And we act off the data. We don't predict, we don't assume, we don't do any of that stuff. If the data shows sells here are what typically hit, then I'm going to be looking for a sell. If the sell doesn't come up, I'm not going to take the trade. Right? It's all systematic here. It's all systematic. There's discretion whether to enter it or to skip it, but the actual entry, there's no discretion there, right? We already know we're taking a sell. I decided this last night. If you guys are on the Discord, again, on the Discord, I post all of my trades the night before. So here under, if you're on the Discord and you're on the premium, just go to the premium channel right here, go to Algo, and I post every single entry here. So last night I posted this at 10:46. I already knew at 6:46 I'm going to be looking for a sell. There's no if or maybes. It's like, no, I'm taking the sell here if it comes up. If it's a buy, I'm not going to take it. So just keep that in mind, guys. Whenever you guys are looking to or just in general, when you guys are trading, you can't have that discretion. Like you can't have that voice behind your head telling you, "Oh, I'm going to take a buy or I'm going to take a sell here." You have to have you already have to have some sort of bias the night before, or not. You don't have to be the night before, but you just have to have some sort of bias, knowing that you're going to take a certain position in a certain direction. Versus, crunch time happens and you're in the middle of the trade and you're about to take it and you don't know which direction you're taking, right? Because that's where a lot of people screw up, I feel like. I feel like a lot of people screw up when they second guess their strategy or they second guess their entry, right? Like whenever you guys take an entry, you should already know what direction you're taking. You should know your TP stop loss. You should know exactly all parameters that you're going to be putting into that trade, right? For right here, I already have my parameters. I'm going against momentum. I'm doing a 1 to 2 risk reward. And I'm basing it off the data because it shows me I have a 61.11% either direction and an 81.82% for a sell. Of course, it's not going to be 100%, right? That's just life. With trading, you're never going to be 100% with your position, but as long as you have probabilities in your favor, then you could feel a little more comfortable with the trade that you decide to take. So let's take a look at the overall market structure and market trend real quick. So looking over here on the 1 minute, you can see here that price is above the pivots. The trend meter is green and the pivots are angling up, right? With that being the case, on the 1 minute over here, it's showing that we are in a bullish trend. Looking over here on the 5 minute, this was actually bearish and it just shot up on the previous candle. So with that being the case, you can see here that price is above the pivots. The trend meter is bluish green and the pivots are starting to angle up. So this is more so a neutral overall trend with the 5 minute. 15 minute, it's still bearish. You can see our price is below the pivots. Trend meter is red, pivots are angling down. 30-minute price is below the pivots, trend meter is red, pivots are angling down. Same with the 1 hour, and the 4 hour here is bullish. So with that being the case,
Connection loss.
Man, this is weird that I'm getting a lot of connection loss today. You guys can hear it in the background. I don't know what's going on, but NinjaTrader is disconnecting like every 2 minutes, it seems like. But anyways, looking at the trend over here, as you guys can see, the trend here is pretty mixed, right? The 1 minute is more of a bullish neutral, 5 minutes neutral, 15 minutes bearish, 30 minutes bearish, 1 hour is bearish, 4 hours bullish. So it's pretty mixed right here. We don't have a directional bias with regard to the trend. Shorter time frames are bullish, very higher time frames are bullish, and then the rest is pretty much mixed. Now looking over here at market structure, it's a little mixed as well. So looking down below, you can see right here that the 1 minute is currently bullish, the 5 minutes bullish, 15 minutes bearish, 30 minutes bearish, 1 hour is neutral, and the 4 hour here is bullish. So with that being the case, like I said, there's no overall bias right now. It's a little bit mixed. This isn't a good thing. You don't typically want to have everything kind of mixed, but this doesn't really matter to us, right? It's not a good thing for technical traders because there's going to be a lot of confusion here with regard to which direction they decide to take a trade. For us, it doesn't really matter because I already have a direction in mind and I'm already anticipating to take a specific direction for my trade here at 646. So in order for me to have this entry at 646, either no sell signal here comes up, or if a sell signal does come up, I need to see this happen. I need price to come up, sell signal come up, push back up here, and then come right back down. Right? Because by the time 646 happens, I need to have a bullish momentum active. So just something to keep in mind, guys. We're getting closer to this point in time right here for this entry at 646. I wouldn't say it's a very great entry. I mean, it's an okay entry with regard to previous historical data. So looking over here at the list of trades, basically, I look at the historical data to see how this trade is hit in the previous Thursdays. So looking last Thursday was October 23rd. The trade here lost, right? The trade here lost on October 23rd. That's obviously you don't want to see that. You want to see the trade win. So looking over here at the 16th was the Thursday before that. It's another position which won. And then the Thursday before that was October 9th, which was also a loss. But this was for a long position, right? It's for a buy. So with that being the case here, I mean, the statistics with the historical data isn't like super amazing, but they still kind of point in that direction, right? That's why the statistics over here show that the buys aren't so good, but the sells are actually pretty good. Now, looking at the chart right here, like we said earlier, I don't want momentum to be pushing up too strongly. Right here, price is starting to kind of range a bit. This is perfectly fine. We actually want price to start to consolidate. So I want price to kind of push up a little higher and then start to flatten out and then come right back down. If we do take that sell, right? If price starts to, or if it continues to climb up higher, then that's where it's going to be a little bit of a problem. The thing with the market today is that a lot of the market movement is going to be based off the news from yesterday, right? The Fed interest rates were cut yesterday. For the longest time, we didn't have news for like, over a month because of the government shutdown. I actually liked it better when there wasn't much news because there wasn't any manipulation, or there was manipulation, but not as crazy as it has been today and yesterday. So with the interest rate cuts, there's always going to be some sort of irregularity with regard to the market movement because some people are betting on, market to go up and others are going to be betting for the market to go down based off the news from yesterday. Looking at the statistics or the actual news for today, there's no news today. I mean, there's the Fed speaking at 6:55, but it's not a planned event, right? It's just the Fed's going to be speaking on the interest rate cuts and like what's to happen from there. So we'll see. There's not really much of a catalyst today like there was yesterday. Yesterday, there was actually a lot of news. There's like three news events yesterday, and we typically don't have news events at all, at least not recently because of the government shutdown. But one thing that you guys have noticed, if you guys have been following the news, is a lot of companies are starting to lay people off, right? I think Amazon is laying off like 1,000 people of just corporate workers. Um, I forget. There's a lot of corporate companies. I think Target's laying people off too. There's a lot of people who are being laid off over the next couple months from these companies, and it's obviously that's going to have a ripple effect to with the market, of course. It's been positive, but I mean, it sucks for the people who are getting laid off, of course. So there's just a lot of factors behind the scenes, guys. So just keep that in mind. There's no actual news coming out. Like there's no economic news, like no NFP, no CPI, none of that stuff. But there's other things happening, like tariff, the war in Ukraine, the war in Israel, the layoffs, AI. There's just a lot of stuff happening behind the scenes that a lot of people aren't paying attention to that is going to affect the market one way or another. Specifically YM, because YM is like the top 30 stocks. And a lot of these other companies or relating factors they kind of tie into YM in a sense because they might not affect YM specifically, but the companies within YM are going to be affected with those changes. So just keep that in mind. Just keep that. There's always going to be something affecting the market, especially in a in this type of market climate. It's just it's hard to really kind of predict what's going to happen next with all the randomness. And the ATR right now is actually pretty high. So here's the thing. Right now, we're using 40/20 for our TP stop loss. The ATR is currently at 35. This isn't really normal. Typically, it's like closer to like the mid 20s, high 20s, low 30s. If this is the case and the ATR remains pretty high above like, higher 30s, lower 40s, then I'll just adjust my TP stop loss to something higher. Right now, it's not necessary, but in the future, yes, maybe. All right, so we got the entry coming up right here at 646. Like I said, it's not the market structure and the volatility here is not necessarily playing out the way I would have wanted for this 646 entry. So if the momentum keeps pushing up, I'm just not going to take this entry at at 646. What I'm going to look for is probably the next one at 645, right? So if you look at my algo data over here, this algo data is pretty much giving us a storyline. Does this make sense? Well, it makes sense to most of you guys here, but if it doesn't make sense to you guys, here is the storyline of the algo. So initially right here, see the first algo entry was at 649, or sorry, 629. This right here indicated a reversal, right? So let me put a line here at 629. So the algo pretty much predicted all this stuff was going to happen before it happened, right? So at 629, see how it says against momentum? That already told us that price was going to reverse here at 629. And what happened? Price reversed, right? So what's happening right here at 646 is that the algo is telling us that at 646, price is likely to reverse again, right? So price is pushing up, and then at 646, it's anticipating a reversal to the downside. Okay. So because momentum here is so high, I don't want to catch the ceiling, right? I don't want to catch a rising dagger. So with that being the case, if I don't get in here at 646, which I'm probably going to avoid because price is still so strong to the upside, is I'm going to wait for the next entry here at 654, right? Because price is pushing up right here, but at 654, I'm looking for a continuation for this reversal, right? It's like this type of pattern right here. So 629, it was against momentum. That reversal here happened perfectly. 646, it's against momentum. So we're looking for a reversal back to the downside. And then 654, we're looking for a continuation to the downside. So see how the algo over here, it pretty much, this is all, it's based off the previous data. It shows that this type of movement happens almost every day for the past 18 trading days, which is basically a month because it factors in only trading days, not necessarily weekends. So that's kind of what I'm looking for here. But initially I was looking for this entry at 646, but I don't want to get caught getting in too early, right? I want to see the confirmation here for the reversal. Let me just put that back. I want to see the confirmation for the reversal here first. And then once that reversal happens, I'll continue to write it down once it's coming down to fill this gap right here, right? Because this is price push up so high and it's due for reversal and continuation down. So at 646, guys, if you want to take this entry here at 646, I mean, feel free. Like I mentioned, I would have liked to see price kind of slow down a little bit and then reverse, but it's not really slowing down, right? The volume here is still very high to the upside. So if you guys want to take this entry, I'll mark it up for you. This candle is going to close in about 35 seconds. I would consider this a little bit risky in a sense because the volume here is just a little too high to the upside. It's starting to slow down, but it's for me, I want to take an entry that I'm very, very confident about, and I'm not very confident about this. The reason for that is because my stop loss is so tight, right? I have a 20-point stop loss right here. So if it retraces up even a little bit, I could get stopped out before it comes down. Like I don't want to get caught, get stopped out, and then it comes all the way down here when I could just enter down here for the 654 entry, right? All right, so there goes the entry right there if you guys are looking to take it. I'm not in this position, but I'll follow it for you guys. So there goes the entry right there at 646. And this is exactly what I was worried about, right? Because if it keeps pushing up, I could get stopped out real quick before it comes down. And that was a good decision to skip out on that trade. So I avoided this loss here because you can see here the momentum is just too strong. You don't want to get in the way of momentum. That's why for me, I prefer to take trades with momentum versus against it. So, okay, so here's the thing with this entry here. At 854, this is actually going to be a buy. So I skipped out on that entry right there for the obvious reasons. Momentum was too strong. Now, this here is going to be tricky, guys. The entry here at 654 is going to be with momentum. So if that's the case and price continues to climb up higher, it's going to actually be a pretty strong buy entry. But the problem with this is that it's overextended, right? This is why we got screwed yesterday. We took a trade here and we tried to ride the momentum higher. But the problem here is that this is overextended. So I don't even know if I'm going to take this 654 entry. I might have to just wait until these later ones, which is perfectly fine. We talked about this yesterday and we talk about this every day. I have a list of entries here. I don't necessarily plan to take all of them. I mean, ideally, I'd like to take a lot of them, but if the market doesn't show me what I'm looking for with regard to momentum and volume, we're not using technicals here. I'm not going to jump into the position, of course. Let me measure this from this lower point. Yeah, this thing is way too overextended, guys. It's up almost 400 points. So taking a buy here is really risky because my thresholds are usually around like 300 to 400 to 500, like the whole numbers basically. So at this point, I mean, it's going to be tough to take a buy here for me, especially after taking that loss yesterday because we got in at not the very top, but we got in basically at the top because it's just overextended at that point. And the ATR is extremely high, 36 points, 37 points. Yeah. So if you guys were to ask me what I would do in this situation, I would just wait, guys. There's more entries at 7 o'clock. Again, if you want to take the 654 entry, I will mark it up for you guys, but I'm probably not going to take it. Yeah, here are the statistics for that trade at 646. I think today's an outlier in comparison to the previous data. And the reason for that is because we don't really see this high ATR every single day, right? This happens like maybe a couple times out of the week, maybe once or twice. But again, this is one of those outlier days. This is because the Fed news came out yesterday with interest rate cuts, and the market's just kind of it's ripping right now. It's ripping, and you don't want to be caught when market's ripping, and um, and you don't know when it's going to turn around. So here are the statistics for the 654 entry. So I just updated it right now. It has an overall probability of it winning of 55.56%. So this shows you that whether it's a buy or a sell, it's won 55.56%. This is a decent edge. It's not great. It gives you a 5.56 edge. Obviously, it's 50. If it's at 50, then it's going to give you a 50-50 edge, but this gives you a little bit of an edge whether you take this position or not. It's not a great edge, but it's there. It won 10 out of the previous 18 entries right here. And you can see over here for the buys, it's won 75% of the entries. So using a 1 to 2 risk reward, it won 6 out of the previous 8 entries. That's a good sign though, right? Like you would like to see that for the position because it shows you that it wins more than it loses and in a heavy way because now your edge kind of goes up even more, right? The edge initially was like 55 for both directions. Now, if you only look for buys here, the edge is at 75%. So it basically gives you a 75% probability that it hits and a 25 probability that it's going to lose. You know, these are good probabilities to take, of course. If you guys are new to this type of trading, this is quant trading, of course. It's very systematic. We're going off the data here. We don't really use technicals. There's nothing wrong with using technicals, right? That's just a different trading style. But for us, we're using quant trading with the quantitative data, and we're looking at the numbers here and making a decision based off the numbers. So just keep that in mind. If you guys are a technical trader, that's perfectly fine. My recommendation, and for me, I'm always learning, guys. I've been trading for over 12 years now, but I'm always learning. So now that we're kind of going into this quant side of trading, I've been pretty much every day. I'm watching and listening and reviewing a lot of interviews with quant traders and hedge fund managers, right? Because obviously I manage my own hedge fund now, and we have pretty good amount of clients. Like the client base has kind of jumped pretty crazy for the hedge fund guys. I think I'm at like over 70 people now. Went from 0 to 70 within the last week or two. So it's been pretty nice. But yeah, like going back to what I was saying earlier, guys, I'm always learning, and what I found that if you guys are a technical trader, there's nothing wrong with being a technical trader, but but you should have some sort of analytical data to base your foundation before you use the technicals. So just something to keep in mind. So yeah, looking at this right here, this is what we're looking at, possible buy here if you guys are looking to get into this position. Like I said, price is overextended, so I'm obviously not going to get into this position. This thing's up over 400 points now, 450 points, and the ATR is at 40. This is way too volatile. This is a problem because our stop loss again is like very tight. So if you want to take this position here, if it pulls back even just a little bit, like look how tight our stop loss is right here. If it pulls back even just a little bit, you're going to be screwed. Like you're going to be totally screwed because it can easily just pull back, stop you out, shoot right back up. So I'm going to sit back on this. I'm not really going to be jumping into this right now. Um, there's no reason for me to jump into this. My TP stop loss is just a little too tight. Here, this is what we can do. Let me just adjust these settings a little bit. So instead of 40-20, let's do a 60-30. I'm just kind of curious to see if the probabilities change a lot. Okay, so the probabilities here do change quite a bit, but the buys here are still good. If you have a wider stop loss, I'm kind of curious, like a little bit higher now. Like, what about if I do 80-40? I'm trying to find the sweet spot here using the quant data, right? So this is a little too far out. 80 points is a very far target for it to reach. Let's do 150. Okay, so you can see over here it has a 50, like basically a 50% chance if you do like 150. Like this will give you a pretty nice cushion if you widen out your stop loss to 50. I personally wouldn't take these odds though. These odds are too low For me personally, I would stick to 40/20 for now. And then, obviously if I need to make adjustments, like I can or I will. Yeah, I'd rather take these odds here. The whole point of this is, trading with probabilities on your side. But like I said, the the ATR is way too high. Yeah, Sam here said 41 ATR buy and sell can both hit. This is high for me. Yeah, 100% Sam. So I'm not taking this trade here. If you guys want to take it, feel free. I'm gonna wait for the market here to kind of slow down a little bit, even if I have to wait until like 720 around there, because I don't think 702 is gonna be enough time for me to get into this. But all right, guys, trade is currently running right now. It is running right there for a buy. Like I said, the stop loss is extremely tight. If it pulls back just a little bit, it's going to cause problems because it can stop you out before going up. And then vice versa, if you're taking a sell here, it can do the same thing, right? Stop you out before it goes down. So I'm not in this position right here. I'm just following it. The reason why I skipped out on this position was, for one, the volume here started to die out at this point. So you can see here the market's kind of going sideways now. And for two, the ATR is just too high. Right? The ATR is too high, and I'm not looking to get caught in any. If it ends up consolidating and ranging around this area, either way you'll be screwed. If it ranges or consolidates, you're screwed. If it pulls back, you're screwed. If it doesn't do anything for a while and it kind of just ranges back and forth between this area, not even consolidation, but ranges back and forth, you're screwed, right? There's a lot of opportunity here to get screwed. Not to say if this trade's not going to run, because this trade does have a high probability, right? 75%. And there you go, full TP. If you guys caught that trade, great work. If you guys didn't catch it, it's completely fine. This was my target entry. I actually wanted to get into this, but because of the things here that I mentioned, there's just too many possibilities of me getting screwed out of this position, which is why I decided not to take it. But you can see there that that was a trade that I looked to take, and I really wanted to get into it if it provided the opportunity for me, but it didn't. So the 646 entry didn't show up today because we were looking for a sell. Obviously this one over here we didn't take because it's on open, but this was the first actual target entry that I was looking to take. So if you guys took that entry right there, we'll just keep a tally of the statistics for today. So today's algo entries. This was the first actual entry that would have came up, but because things we mentioned, it was skipped. So this was a win for plus 2R. Total trade.
Connection lost.
And this thing just keeps disconnecting today. Total trades. 1 win. 0 loss. Plus 2R. All right, guys. So there goes the first entry for today. Unfortunately, I skipped out on it for obvious reasons, but I'm glad to see that it still hit. The algo is still on point with identifying it. And it was a spot on entry right there for a buy. Let me scroll up to see if I'm missing any questions here. Let's see, Justice is asking, how recently did you make this change to quant? Well, the thing is, this strategy, we've been using this for years. I've been using this specific strategy. I mean, it was mainly used on open, like at a specific time when market opened up. But now we're just using the data to trade all throughout the different times of the day, right? Because it was basically we stuck to just one exact time period to apply this. It was 1 minute, and we applied it at 6:30 a.m. every day. So this strategy is not necessarily new. It's just using the data here to identify different times of entry. Because we would only enter this at 6:30. It was like every day, 6:30, hit or miss. We're going to take that trade at 6:30. But I made this transition to quant trader more so like last month. So it's been like a little bit over a month since I've been transitioned from technical trader or technical retail trader to now institutional quant trader. So I've been doing this for about, I mean, you can see over here from the stats, you see the big difference here, right? So moving from retail trader to quant trader, you can see my profitability has gone up like extremely well. Right, so let's go back to September. This was a kind of a shitty month for me. Obviously, market was super choppy, but let's go back to the previous month. So August over here, this is how much profit I made for the month of August, and this is how many trades I took, right? Pretty good, pretty decent, not amazing. But now let's go over to October where I made that transition to quant, and it's a huge difference right there. Huge difference with regard to profitability and trades and consistency. Because typically, so here's the problem, and I'll show you guys again in a little bit once we get to that point. But the problem with trading just technicals is that there's more room for a mistake, and um there's also room for you to second guess your position. I feel like that's the worst part. So I think the worst part about being a strictly technical trader, or just, retail trader in general, is that if you're not really dialed in with your strategy or with your criteria, it's really easy to second guess your entry, right? Like to like not know whether you want to take a buy or whether you want to take a sell. At least when you have the data in front of you, you have the probabilities that you're like, okay, I'll take the buy or I'll take a sell, and you'll know exactly what you're going to take. But with a lot of people, just in general, it it's the trade psychology aspect of it, right? If you don't have a systematic strategy, then you're always going to second guess your entry, even if you know it's going to hit, or if you know it's not going to hit. You're going to second guess your strategy, and I think that's a big problem for a majority of traders out there. It's really having something that's systematic where you don't really have any decision making with regard to the direction of price. It's mainly the direction of price, because I feel like a lot of people kind of flip flop on that, and myself too. You know, we used to take the breakout where we would think to take the opposite, right? We're like, oh, we're gonna take this, but if this happens, then we're gonna take it a different way, and that would really screw up our positions because there's no consistency there. All right, guys, the 702 entry is going to come up soon. Again, like I said, guys, the ATR is still a little too high, so I don't know if this is one that I'm looking to get into. I might have to wait for the next one. The problem with this too is that this is with momentum, so it's another buy entry here. So if you guys want to take that at 702, I'll mark it up for you guys. I personally, the with momentum entries don't really work well when market's going sideways like this, because you need price to actually be pushing in the direction of momentum. Right now, it's not really pushing anywhere. If anything, an against trade would work good in this position, because you can look for the reversal, right? Prices hit a ceiling here, and then you'd look for reversal to the downside. Yeah, and if the sell signal here closes, there's just not going to be an entry, because the entry at 702 is for a buy. So, all right, we got the entry coming up shortly. Yeah, we got the entry coming up shortly. Let me just drag this back over. All right, guys, if you're looking to take this entry right here, I mean, it's going to line up. So the 702 entry is actually going to line up as an actual buy entry. The only issue here, again, is the volatility. Well, the overall volatility is a little too high with regard to ATR. If you guys want to take it, again, it's going to be a buy. I think this is going to be a really tight position. You're going to be in a really tight space here, because if it pulls back at all, you're going to get screwed, right? You don't want to get screwed in a position like this when you can kind of just sit back and wait. The statistics over here are okay, though. They're not that bad. This is with momentum, 702. The only thing is, like, so the actual numbers look good, but the market volatility and direction here is not really that good, because you don't want it to be going sideways. You want it to be moving directional. All right, so there goes the entry right there. If you guys are looking to take it, it is currently running. I would have skipped this in general just because of this big red candle. But yeah, price is moving right there. It's a buy entry. Looks pretty good. Like it identified the exact floor of it, and now it's pushing right back up into the range. So exactly on the floor, and it's pushing right back up. No drawdown on this trade right now. See, but this is a problem. If it pulls back a little bit, it's pulling back right now. If it pulls back just a little bit, it can stop you out, because you guys can see how tight the stop loss is. It's for a 1 to 2, but it's a really tight stop loss. I think this trade's going to play through. Usually, if the first candle kind of goes in direction, it doesn't go into drawdown, it's probably going to play through. And I think that's going to be the case here. So if you guys are in this position, we'll follow it for you. But I mean, you can see it right here from the previous candle too, right? The first entry over here. If you go straight in a profit and there's not much drawdown, it's the odds of it hitting and pushing through to the full move is very likely. So we'll follow it here for you guys. Again, this is the reason why I would have skipped out on it. See how price here is going sideways? We don't want that, especially if it's with momentum. If you look at the 702 entry here, it's with momentum. You want it to be pushing with momentum, right? You want momentum to be going up, up, up. You don't want it to be going sideways back and forth because there's no momentum there. You just get caught in the limbo. Yeah, Brock said he was avoiding a buy there. Yeah, let me scroll up. So Justice said, win on that. I'm trying to find my own parameters for entries in accordance with yours to make a plan. Yeah, Justice said, no, I really like this. I'm trying to start learning more about quant myself. So listening to you is helpful. Yeah, I mean, for you as well, Justice, because you understand coding, right? So that's a big thing because you can pretty much code any strategy into, like me and you could kind of bounce off each other because I have the strategies, but you have the coding background. So I can kind of tell you what to code into a strategy, and then you can have the quant data for that specific strategy, right? Because I have a lot of strategies. If you looked at the the um the catalog, I have a lot of I've been trading for a long time, so I have a lot of strategies here that I've been using. And there you go, full TP on this trade, guys. Yeah, full TP on that trade right there. So yeah, maybe in the future, probably not right now because I'm just too busy with the hedge fund. But in the future, Justice, we could work with each other to develop a lot of quant-based strategies because I have the knowledge, right? I have the knowledge, I have the experience. You have the coding background to kind of perfect things and put them into code where we can both benefit from it, of course. So we'll work on it. Once I kind of free up some time, we'll definitely we'll see where we can go from there. But all right, guys, two entries for the day, full TPs. Unfortunately, I skipped out on that one, but I had my good reasoning to because of the volatility and direction. So another win right there, 2R for the day. So total trades, two wins, currently at 4R for the day. All right, guys, looks good so far. Again, this thing is a little tricky. Sam, I just saw your message right now. Yeah, Sam said, boom boom sold on the red doji full TP. So I didn't mean to fade you. Did not know you were buying. No worries, Sam. So you actually didn't really fade us that much because it didn't really go into drawdown. This candle right here might have been a little scary, this red one, because it did come down a little bit, but this candle pushed right through. And you can see here, this is all based off the data, right? This intro over here at 702. I already knew this was going to happen. I called this out last night. So if you look at you look at the so if you guys want to see my entries, I post my entries literally every day or every night before the market opens. So I posted this last night at 10. We already identified these entries, the two wins right here. 650. There's only two entries that came up. Right. This one over here at 646, I identified these, but they didn't come up. This one did come up. That's why it's listed on the trades for today. And then this one right here at 702. I still have two more entries lining up right here. Um, so we'll kind of see if those will come up. But again, if you guys want to see these entries here, just go to the Discord and go under the premium channel. If you guys are not part of the premium here, just go to the website. The website is kodikaitrades.com. Click on the live trading room right here. If you guys want me to trade for you and you don't want to actually trade, I mean, you can still hop on these live sessions. But if you want me to do all the trading for you, like, using my own analysis to identify which ones to take, which ones to skip, you can go to the other website, which is kodikaicapital.com, fill this out, and then I can manage your account for you. I'll take all the trades for you. So here are the numbers now, guys. The numbers went up quite a bit. So this was the entry here at 702. It was previously at 87.50% probability of it winning for buys. It's now at 88.89% probability. So obviously this trade's going to be listed again for tomorrow for us to maybe get into. Hopefully the volatility here kind of slows down a little bit, but it's not really looking like it right now. The ATR is currently at 42. So it's not getting any slower. It's actually getting higher because of this big green candle right here that just came up. So we'll see. I mean, we have to kind of wait until we get to this point here. Uh, Next entry is at 721. Again, I need the volatility here to kind of slow down a little bit. It's too high. Like one candle can really screw up our positions, of course. Yeah, Barack said the data doesn't lie. There's clear indication that things changed for the better. Yeah, exactly, Barack. Definitely. Let's see. Craig is asking, what does quant-based strategy mean? Um, I mean, it means what it's literally called, quant-based, right? So quant-based means it's based off the quantitative data. So you're trading off the data, you're not trading off technicals. So I don't care what the trend is. I don't care what anything is, right? I don't care if we're at support. I don't care if we're at resistance. I don't care if we're at sessions. I don't care what price we're at. I'm basing it off the quantitative data. If the data shows me that momentum pushes at a certain area at a specific time, that's why I have specific times here with direction. I'm basing it off the numbers. So that's what quantitative based strategy means. It's based off the quantitative data. So basically, when you're trading as a quant trader, you're basically trading as like a scientist. You're trading off the actual data. Like, for example, if you're a scientist and and someone tells you that the world is flat, right? Obviously, the scientific data shows that the world is not flat, it's round, right? So being a quant trader is you're basing it off science. So you're basing it off science, you're basing it off mathematics, you're basing it off logical data. So the thing here is like, so this trade over here, uh, it was for a buy, right? And I based it off the probabilities here that the trade's going to win for a buy. If you were to argue with me and you were to say, oh, the sells here are going to win because it has a higher probability, I would tell you, no, you're actually wrong. You think that because, off of your own analysis, but the thing is that the data over here shows that it's for a buy. That's why I only aim for a buy there, not for a sell. I mean, the sells are possible, but it doesn't have a higher probability, right? Because right here it shows the buyers have an 88.89% probability. It won 8 of the 9 previous buy entries, but the sells over here, they still win sometimes, but they've only won 4 out of the 10. So if I was to base everything off like what's higher probability, I would say the buys here, of course, because the numbers don't lie, right? Just like what Barack said. The numbers here are right in front of you, and it's like, okay, am I going to take a buy or a sell? If I was to take, if I'm basing off probabilities, of course I would go with the buy, not the sell here. That's what makes it quant based because there's no discretion. Like everything's based off the numbers. You're not like, oh, because the trend here is bullish, I'm gonna take a trade. Or the trend here is bearish, I'm gonna take a trade. You're like, no, I'm taking the trade here because the numbers show me that the buys here make more sense and that they hit more often than not. So yeah, Rev said watch the Larry Williams video yesterday. It was a really good video. Yeah. If you guys haven't seen that video, guys, I posted it in the Discord yesterday, or not yesterday, over the weekend. It's a really good video that you guys should check out. Because that guy's actually been trading for like I don't know, like 40 years now. This guy's old. He's old and he's been in the market and he traded back when he had like this crazy edge that nobody else had. Uh yeah, he's just he's a classic trader. So if you guys didn't see that video, it's also posted in the Discord. You can just look back at my previous post here. I think it's in the chat. Yeah, with Williams over here. He's the record holder for the Robbins Cup or the World Trading Cup. All right. Like I said, I've been watching a lot of these videos regarding yeah, I'm gonna look it up right now. I was watching this video with Lansby. Most of you guys know who Lansby is, or maybe you don't, but Lansby is a prop trader. I think this video is like pretty interesting too. Because the thing is, so Larry Williams, he talked about how like how technicals don't really they're random. Like there's not really you don't have an edge with technicals unless you like tie it in with some sort of historical data or some sort of back test that shows you that a specific strategy has a high probability. That's why I was saying like if you guys want to trade technicals, it's fine, it's perfectly fine, but you should try to get the quant data first to identify the strategies actually has an edge. And then once you have that edge, then you could add the technicals on top of it, right? So for example, over here, if I was taking a buy here, you can then add the trend to identify, okay, I'm only going to take this, because it lines up with the probabilities. But yeah, if you watch this video, and I'll post it in the Discord. Like there's it's crazy because like a lot of people like they live by like Fibonacci, right? And those types of tools. Well, there's nothing wrong with, but there's here, I'll put this in the chat. But like, there's a lot of these really well-known traders that explain why the Fibonacci works. Like Larry Williams ran a data on he ran a study on Fibonacci and said that they're all random. And then even Lance B over here, he also did a study on Fibonacci's and showed that it's random. The only Fibonacci level that kind of maybe works sometimes is 50%, but you'll see a lot of people who use the 68, which is they call it the golden ratio. It's not a golden ratio because if you actually do the data on the Fibonacci, it's actually not, there's no edge there. All the levels are random. But all right, we have price kind of going back and forth here between the range guys. The volatility is starting to slow down a little bit, and I'm looking for a possible sell entry right here at 721. So what I would like to see here is price to continue to consolidate and then swing down at some point. Yeah, Brock, check it out because I know you like to use Fibonacci, and it's it it's gonna be really like it's an eye opener, especially if it's something that you actually use. Oh, you don't? Oh, I thought you did. Yeah, it's it's interesting. It's an interesting video. But yeah, whenever I find good videos, guys, I'll share them with you. I'm pretty much every day I'm looking at different videos from hedge fund managers and classical traders and people who've been trading for a long time. And I try to get an insight to see how they view the markets so that they can help me improve my quant trading as well. Yeah, I agree with you, Brock. Let's see. Michael's asking, is it just CodiKaiCapital.com? Yes, that's the website. So you put www before it, Michael, because it sounds like it's not closed off. Yeah, you just got to put a www. I got to fix that. I think the root is messed up, like the initial part. I need to fix the link. I just have to yeah, I don't know what happened with that domain. I'll have to fix it. So, all right, guys, we got price here kind of just going back and forth as we speak. There is not much here going on. Yeah, Barack says he hates Fibonacci. The only indicators he's using apart from order flow is Kodi Kai systems. Yeah. Yeah, which is cool. I mean, order flow is good too, but again, order flow is still a little bit discretionary, right? Because it doesn't base anything off the actual data. Yeah. So there's nothing wrong with like so again, guys, there's nothing wrong with trading technicals and there's nothing wrong with trading order flow. But what I would say is always base your foundation off the actual data and then build off that. So first understand and confirm that you have an edge in the market, right? Because you want to have an edge. Like if there's no edge, there's no point in building on that strategy. If the strategy sucks and it's not going to make you profitable, then there's no need to add anything to it. The other thing is you don't want to make it too complicated, right? That's one thing that every time I see an interview with like a very, very successful trader, and I'm not talking about like, a random trader. I'm talking about like people who are like in market wizards and stuff like that in these like books. All of them mention to keep things as simple as possible. That's why for me here, I don't really do anything crazy, right? I just go off the momentum here, and that's all I really do. I don't really add, like, I don't even add technicals to it. I just go directly off the momentum because if you add too many requirements, it's called overfitting in like the quant world or like even the strategy building side, if you overfit a strategy, it's going to make it more complicated and you're probably never going to have an entry or you're going to have too much discretion when you guys take an entry. So you guys want to build a foundation and then just add small confluences to it, like maybe just adjusting TP stop loss versus adding like a trend. Because I'm guilty of that, right? If you guys look at my strategies from the past, I have a lot of tools here. I use a lot of trend tools. I use a lot of momentum tools. I use, structure. I use red flags, all this stuff. The crazy thing is I use this for years and they work pretty well. But after moving from this here, like you guys can see my profits. Like it's like it's a day and night, guys. So look at my profits for October. I made 414,000. Look at my profits from January. I went from making 72,000 to like four times to three times that, going from retail trader, technical trading to quant trading, which is today, right? This is a huge difference. And look at my consistency here because it's based off the data. So I'm not here to shit on anybody's strategy, but I'm like literally telling you that this is like it's a huge change going from like making 72,000 for the month to like making February. And look at the numbers of trades. It's the same exact number of trades, right? Look at my trades here, 49 trades. Like I made 95,000 this month, right? In February. 30 trades, 49 trades, 60 trades, etc. Look at my trades here in October. I took the same amount of trades here, right? 41 trades, and I'm up like almost double, if not triple, because I'm able to put more size on these trades because I trust that the quant data is is accurate. Because obviously the numbers don't lie. If the numbers tell me it's an 80% probability, I'm gonna take that trade, right? It's a no-brainer. The problem with trading like earlier in the year is like I wasn't really sure about these entries. I was like I had a feeling they were gonna hit, but they weren't like, I wasn't able to take that trade and not worry. Like every time you got into a trade, you kind of worried about it, like, shit, is this gonna work or is this not? But now it's like, okay, if I take a trade, if it hits, great. If it loses, that's perfectly fine because I went based off the numbers. So yeah, just something to look into. You don't, I mean, obviously you're not going to be able to understand what I'm doing because all this stuff's kind of going with, it's all going like in my head. But the numbers here, if you're able to pull up the numbers, it will obviously, um, it'll obviously make sense. Yeah, Craig said, I see. I never heard about this until following you. It makes perfect sense though. Yeah, it's just trading scientifically, right? I'm trading with my head. Okay, so this trade over here is going to be for a sell, guys. Obviously, so like this is a 721 entry. I talked about this earlier. I don't really want to go against the momentum here, right? The momentum's pushing up right now. So I don't think this is a trade I'm looking to get into. If anything, my last entry for the day where I have possible opportunities is going to be at 751. If you guys want to take this trade, I mean, feel free. You can see here that the market's not really doing anything, right? And again, because the market here is not really doing too much, I would consider this a risky entry. Look at how high the ATR is. It's currently at 40. And look at how tight my stop loss is. This isn't it's not the type of trade that I want to screw up on, right? Because if I'm wrong, even just by a little bit, by a point, couple points, this could really screw up um, my entry. So I'm gonna sit out on this trade, guys. It looks like it was a good decision because I would have gone stopped out. See, this is why it's important that you guys understand what you guys are doing because although I do have the listing of the entry there, I saw that the momentum here was pushing up and that's why I decided to skip it. And it's a good reason why I did because look at how it got stopped out right there. These candles are just too big, right? The candles are too big. You have to understand, you gotta know when to take the trade and you have to know when to sit on the sideline. Connection lost. And then of course the connection lost right there with my ninja. All right, so let me change it to 751. So, we talked about the quantitative data, guys, but you still have to understand when to sit out the market, right? Like you have to understand how the specific asset moves. And because the ATR is so high, I already knew I was going to get into that position there for that specific reason. So, so that is that. All right, let's see what am I missing here. Jesus, yeah, of course, bro. I thought you were already on here. Let me see if I can find you on the Discord real quick. Here, I'm gonna go over here real quick. Is it by your name? I don't see any Jesus here. What's your Discord username, Jesus? Or you can message me on Discord. It's probably be easier. I'm looking at the list here, but I don't see your name on here unless it's something. Yeah, because I don't have anything here with Jesus. Maybe your last name? You're definitely not Oliver Socks. Oliveres, yeah. Jesus, just message me on Discord and I'll get you on there. Or did you message me before? Let me see. No, I don't have any Jesus on here. All right. Yeah, once you message me, Jesus, I'll get you on here. We had some team profits here. Or no, we don't. Not free. Not yet. All right, guys, my next entry is at 751. There's nothing there yet, but that's going to be the next entry as we get there. I can mark up some market structure here if you guys are interested in that. I mean, there's not going to be much here, but like I'm not going to mark up the market structure down, or I guess I can. It's price is obviously not going to get down here, but I guess for those of you who want to see it, I could still mark it up. So we got that lower level resistance turn support. Um, so there's a lot of market structure down here, but I mean, obviously it's irrelevant now because price is so high. Um, then we have a couple levels here. But yeah, guys, in this type of market, you got to play safe. You don't have to play safe, but you got to play it smart. You really got to play smart because it's really easy to get screwed in this market right here. Because for one, the volatility is too high. So, if you're wrong, you're gonna be wrong pretty quick. And then also price here is kind of just ranging. I mean, this thing's been pushing up for a while now. I'm kind of curious to see what other assets are looking like. Let's see. I was kind of curious to see what was going on with something like gold right now. Let's see. Craig is asking, are you still in touch with Sisuk and Maddie? Yeah, I mean, like we still know each other and we don't, I haven't talked to them in a while though. I mean, they kind of went off and did their own thing. They're both trading order flow now, which again is perfectly fine. You know, my goal with like a lot of people is kind of, well, here's the thing, like when you guys are trading with other people, like, and you've been in and out of this group for like years, Craig, trading my strategy is completely different from a lot of people. So I always tell people if my strategy doesn't make sense to you or if it doesn't resonate with you as a trader, then you might have to find your own way. And that's kind of what happened with Sisuk and Craig, like, or not Craig, Sisuk and Maddie. They both like to trade order flow because that's kind of their style of trading. And I don't trade order flow. So they went on and they trade together, but I don't trade with them at all. I haven't traded with them in like maybe over a year now because they don't momentum trade. And if you trade with someone who trades something different from what you like to trade, it's going to skew your perspective of the market, right? So yeah, I mean we're still friends. I just don't we don't trade together and we don't really talk trading because they see things differently than I do. And it's perfectly fine. The thing with trading is like there's so many different ways to trade. Um, and you just got to find what works for you. Honestly, I think quant trading is like this is like the only way to really be profitable long term. Because the data here shows you like what's working and what's not, and it's based off the data. Um, the thing with technical trading, like I've been trading technicals for a long time, for like 12 years. And the thing is, I was like you could look at my statistics over here. I had a lot of ups and downs, right? Because the market's not always going to move in my favor. So let's just start over here and this is like me being completely transparent with you guys. This is like the reality of trading. That's why quant trading kind of opened my eyes like a huge amount because I'm like, damn, I'm finding like some crazy consistency because I'm trading off the data now. And I could understand why hedge funds trade like this, right? If you guys look at any hedge fund trader or any hedge fund manager, nobody trades technicals. If they do use technicals, it's mainly just for confirmation or confluence. But I don't know any hedge fund traders who actually trade technicals by itself. All of them have some sort of quant background or some quant foundation for their strategy, and then they just use technicals on top of it. So, looking at these are my stats. So January made 72, February made 95. March, so this is an outlier. March was a really good month for us. We just had not very many losses and we had a lot of good wins. I usually don't take this many trades. April was like one of my first losing month. It was a small losing month. May was like okay. Like you guys can see here. See, this is the consistency of trading technicals only, is that you're gonna have like some like they're usually gonna be kind of like scattered, right, with the profits. Like right here, June did 50, July did 167. August did 133. They're not bad. So like you can see here, like you're gonna find some sort of consistency, but the problem with technical strategies is that it's very seasonal, right? September here, I made a couple losses, but then I moved to quant trading here. So basically from the 29th to the 30th, I started my quant strategies right here from the 29th up until today. And you guys can see a lot of linear consistency with regard to my entries and my strategies and everything here in total. Because I'm just going off the data. It's like I'm not really thinking anymore. There's no like, I don't have a scatterbrain because the night before I already know what I'm going to take. So yeah, it's something to take into consideration. Thanks, Smith. Thanks for mentioning that. So Smith over here just mentioned that my 751 entry is not a target entry. Let me do the math real quick. So yeah, if it's not a target entry, it's one that I'm probably not looking to take, in which it's perfectly fine because market here is going sideways anyways. But let's just do the math real quick. So this is how I determine whether it is a target entry or not. It has to have a minimum combined probability of at least 65%, right? So in order for me to add that up, let's just look at the data here. So for this entry at 651, it has a 50% probability of it winning for buys or sells. So it won 9 out of the previous 18 entries. That's not good, right? We don't really like that. You want it to be closer to 60 or 65. So in order for us to kind of balance this out, we look at the directional entries over here. So for the long positioning, it is 36.36. This is horrible. I'm not going to take a buy here. This number is too low for me. It's still profitable because if we're doing a 1 to 2, you only need a 33.33 probability for it to win, right? But this only gives me a 3% edge. So with a 3% edge, I'm not gonna wake up in the morning for a 3% edge. I want something higher. So looking over here at the cells, this is actually better, right? It has a 71.43% probability of it winning for just cells specifically. It's won 5 out of the 7 entries. So basically out of the month period, it's only lost twice for cells here. Now let's go ahead and pull up the calculator. In order for me to get the average of this, I'm going to add the overall with the sell side, right? So 50 plus 71 plus 40, sorry, 50 plus 71.43, that's going to be a total of 121.43, right? The total of that is going to be 200. So I'm going to divide that by 200. And you guys can see here, everything is quantitative, right? I have the data here. I'm doing the maths equation to figure out what the probability is. The overall probability is 60.75. So this is enough to be added to the list, but it's not enough for me to take the trade, right? Because I need above a 65. This is only at 60. So, or 61 basically if we round up. So that's why this here is on the list, but it's not a target entry. So yeah, back to what Smith said, because it's not a target entry, I didn't plan to take it today, and I'm probably not going to take it, of course. So I'm basically done for the day. I didn't take any actual entries on my end, but looking at the algo entries for today, these two did win. So there's only two entries that which really came up, which was 654. And let's do the math over here, right? Let's do the math on this one. So this is why it was a target entry. So it had a 61.11 probability overall, right? Now let's add up the probability for cells, 81.82. 81.82, it's a total of 142.93, right? With that being the case there, let's divide that by 200. The probability was 71.5. We're going to round it up. So because it was above a 65, that's why it ended up as a target entry, right? So you guys can see here, everything that I do is quantitative. There's science behind it, right? There's science and math behind my entries here. I'm not taking a trade because I see a wick here, or because I see an upwards trend, or because I see prices that is hitting a level of like 48, whatever, right? There's no technicals here that I'm using. Everything is based off the scientific data. Um, and I think this is making me like it's making me like a crazy, crazy good trader in a sense because this is how hedge funds trade, right? They don't trade based off like off desire. They don't trade off like off of feelings, right? There's no emotion here. Like I'm not emotional because this trade is a high probability. I'm trading, I would have been taking this because the numbers point in that direction. It's like, okay, now I have, and then here's the edge, right? So now that you have this number here, we'll subtract this by 0.50, and there's my edge. So I have a 21.5% edge in the market. That's a good edge, right? Wouldn't you take that edge if you had that edge? That's why for this entry here I would have taken it. But then now that's where the discretion comes in. So like right here, I already know I have a 22% edge. Now I'm like, okay, I look at the market here at 640, 654 or whatever. And I look at it and I'm like, okay, now this is where we use the momentum analysis to see if market's actually pushing that direction or if it's turning, right? So yeah, so I come in with a foundational probability of the trade winning. I have come in with a foundational edge. And then once I have that edge there, then I determine, okay, is the market moving the way I need it to for me to take advantage of this edge? Or is there a probability that the trade's probably not going to work out? Because it's never going to be 100%. So you still have to have some sort of discretion there, whether you take it or whether you sit out of the trade. So yeah, that's a key thing to look at. Rev said it's very concerning, seeing how AI is affecting the job market. Definitely going to get worse. Yeah, I know. That's what I was talking about earlier, Rev, right? Um, so Amazon is laying off 1,000 people. That's crazy, right? A thousand, and these aren't regular jobs. These are corporate jobs. Like, the thing with Amazon is like they're not laying off just like the random delivery driver, which they're going to fire those people eventually, right? Because there's going to be automated like self-driving cars, of course, within the next year or so. So yeah, it is concerning. It's concerning like in a lot of aspects because or 14,000, damn, okay. So yeah, iPhone actually mentioned, I think it was actually 14,000 corporate jobs. Here, I'll look it up. Massive corporate layoffs. Wow, this is crazy. So let me just show you guys real quick. Let me drag this over. So yeah, 14,000. There's a lot of people here. So look, check this out. These are the layoffs based off AI. The thing is, AI is so smart, guys. So like I don't blame them for doing this. They say this is why the market keeps going up because they're saving so much money on firing these people, right? So Amazon is cutting 14,000 corporate jobs. That's crazy. These aren't like delivery drivers, um, factory workers. These are people that have like high paying jobs. Um, so 14,000 corporate jobs from Amazon are getting cut. 30, they're aiming for 30,000 corporate. That's a lot of corporate jobs. This is crazy because I have a friend that actually works for Amazon corporate, so he's probably gonna get fired pretty soon, which is kind of sad, honestly. He's a marketing director, I think, with Amazon. And yeah, if AI can find better marketing, he's gonna get axed pretty soon. Um, yeah, Paramount is gonna lay off 2,000 people. Damn, this is crazy. USPS, they're going to reduce its workforce by 48,000. That's crazy, right? That's crazy. Like these are like people who deliver our mail, right? You're gonna have a robot delivering your mail pretty soon. GM is laying off 1,700 people. Nestle's is going to be dropping 16,000. Target 1,000. So this is the number I screwed up. I wasn't thinking about Amazon. I was thinking Target. Target's going to get rid of 1,800 positions. It's crazy. Microsoft getting rid of 9,000 people. Yeah, guys, I mean, if this doesn't show you that like, AI is a future, or you need to find something that's going to be um you either got to get into the AI space or you got to start your own business at some point because that's pretty scary. The AI is taking over like that. I tried to run AI for this trade over here. AI was wrong. So I did this thing. I took a screenshot of Bitcoin and I was like, give me the highest probability position for Bitcoin. I was just kind of curious to see what the AI would spit out. And it told me this exact position here. I just wanted to test it out to see I didn't take this position. But AI is not that smart. I mean, it's smart, but it's not that smart. I'm gonna keep playing around with AI to see if I can figure out if it's worthy of taking swing positions or not. So like basically what I did here, guys, is I took a screenshot, I clicked copy image, I posted it in ChatGPT, and I was like, give me the highest probability trade for Bitcoin right now, and give me an exact TP and give me exact entry and stop loss. Well, looks like Bitcoin or crypto or I'm not crypto. ChatGPT failed on this one, or not yet. I mean, I could be wrong. This could bounce up. I'm just kind of curious because if that's the case, and we can kind of take swing trades based off AI, like it's worth the risk. I mean, if it's profitable and something like that, I can probably run a test on that too to kind of see how it works. Maybe it's something to use, but yeah, Barack said, "Ha, I wouldn't trust it." I know, I agree. Um, Let me scroll down real quick. Yeah, iPhone said manual labor cut will be so much. Yeah, because the thing with like even factory workers is that a lot of them just organize packages for like where they go. And if you guys have seen like an Amazon warehouse, all that stuff can be automated too, right? And it's going to be more efficient too. Yeah, Michael said corporations are always overstaffed. I agree. iPhone said recession inbound for sure, assuming the AI revolution. I agree with you too, because the thing is, like, if all these people get laid off and they can't find a an equal paying job, then they really are screwed because easily replaced, right? Let's see. Alad said check my post in the Discord. Oh yeah, that's crazy. Yeah, that's nuts. All these companies laying people off. Even better decision to get better at trading, guys, because you need to have some sort of fallback here. Yeah, Michael said a delivery driver does something actually meaningful by getting the stuff to your door. Yeah, I agree. I agree. Let's see. Craig said, yeah, that makes sense. Just wondered because I don't see any posts now from Discord from them recently. Yeah, they actually started their own group. I don't know how their group's doing or if they're even active. I mean, you guys have been around for a while. Craig, you were around when Aaron was here, right? Black Aaron. Yeah, he's I mean, the thing with my group here is I created this group here because I hated trading by myself, right? I feel like when you guys trade by yourself, it makes trading so much harder because it's such a lonely game. Um, but a lot of people who started with me in the beginning, they kind of went and did their own thing, right? Which is completely fine. Like Aaron left and he kind of started his own trading group and he just trades with like five people now, and that's what works for him. He initially started out pretty big because he took a lot of people from my group, which was kind of shitty because I kind of taught him how to trade and how to do everything, but um and he basically stole people from the group, but none of the people in that group are like really profitable. So it's karma. It's basically karma. Like people who left K2 in the beginning, they're not doing well trading. People who stayed with K2, they're doing pretty well now because we've been consistent. Same with like the other groups, right? People come and people go. People go and they decide to start their own groups, and that's completely fine. And I always welcome people back. Like I don't have any animosity. If someone leaves the group and they come back later, it's perfectly fine. If you want to stay, stay. If you don't, then you don't. But yeah, everyone from them, they're doing their own order flow group, but I'm not even in that group, so I don't know. They're probably in there talking shit about me, but I don't care. I saw this this post that said where was it? It said something like, I don't care if you don't fuck with me, banks do. And that's true. Like it doesn't affect my trading or anything like that. Because my trading style doesn't line up or align with everybody. So I mean, I'm glad I found this because this is gonna be printing profits uh for sure over the next couple of years. And if we need to make adjustments to it, of course we're going to make adjustments to it. The thing with the algo here is that we don't really need to make adjustments to it because it adapts with the market. So if you guys look at my algo entries from like earlier this month, like we had a lot of entries that were coming up like earlier, right? We had like maybe 20 entries or so, but then it's starting to kind of dwindle down a little bit. And if that becomes the case, and if these entries start to get smaller and smaller, the only difference that I really need to change is going to be the TP stop loss, right? If it ends up becoming wider. The thing with the ATR here is that it's not very consistent, right? So if you look over here, it's not very like on Monday it was like lower, like on the lower 20s. What we need to wait for is for the market to kind of stabilize like overall and have an average ATR. Like right now, the average ATR is kind of all over the place. Typically it's like around mid 20s to higher 20s, lower 30s. Like right now, this is what I would consider average ATR, sort of. It's currently at 34. If it drops down to like 32, 30, then I'd consider that normal ATR for the market. You guys saw earlier over here, the ATR was at like 40, right? That's too high. 40 is too high. Below 20 is too low. The average that we've seen, because we trade YM every single day, we see the average around like mid 20s, high 20s, very low 30s. So like we talked about over here, all that we have to do really is change the target, right? So here, this is a set 751 entry, right? We have a 50% probability. Let me just change this by like a little bit. So let's do 50, 25, and let's see if the numbers here change a little bit. Yes, the numbers here change a little bit. Let's see. Craig said, I don't remember Aaron, but I certainly remember Steven. So Aaron actually, he was the one that helped me build up K2 in the beginning. So if you were here in the very, very beginning, Aaron, we used to be on the lives together and he helped me build up the community. And we started from like, he was probably the first person that joined the group. I don't even know how I met Aaron, but he was one of the first people in the group and he helped me build it. We actually were partners in this in K2 before. We were partners in this and he used to be like the main person that would onboard people. So I don't know if you're that back from that far back, Craig, but yeah, Aaron was one of the first people that I started the group with. But then, of course, he kind of wanted to do his own thing, and that's completely fine. I'm still good friends with Aaron. It's just he just trades differently, and he trades with a small group now. He's doing good, but uh, everyone kind of does differently. But anyways, back to what I was saying here, guys. See that the percentages here they kind of change a little bit. So like it's at 71.43. This is still the same, and if you change it by a little more. See how the numbers here change? This shows you that at 721, it actually doesn't get better as you go wider. It gets worse. Let's do this. Give me 35. And this is how I find the sweet spots, right? If I see the numbers here not change very much, I'm like, okay, if that's the case, then I should go lower, not higher. So here, see how the numbers here get lower? It was at 50% at like 2040. Now let's go a little bit lower. Let's go to 3015. See how the probabilities here go up a lot, or actually not. It doesn't go up higher, I went it lower. So you can see there's not really much of a sweet spot. Now the sweet spots can be 40-20. That's why I'm sticking to 40-20. It's at 50% overall. Um, and that's how you can kind of figure out how to adjust your edge. But right now the edge is perfectly fine where we're at 40-20. It's yeah, that's just kind of like how we identify what the numbers are, and that's why I haven't made any changes. I'm still sticking to 2040 at the time. Let's see. JT is asking, how do you know what to take the night before? I'm new to this. So here, I'll just show you the indicator. You're new here, so you're not familiar with like what we're doing here. So like basically, I have this screener tool, and let me just when it loads up, I'm going to turn off this other one. This is just my lower. This is a lightweight one where I just pull up my stats for the trade. But basically, this is the way that it works for the most part. Let me change the settings over here. That 40/20. So basically, you're going to see a screener come up over here, and it's going to give me all of the high probability entries. If you want to do it this way does work. But for me personally, I just do one by one because it just makes more sense for me, and it's easier for me to do because I have a system in place. But basically, like I would set the times over here for where I want the data, and you'll see here it says updating report. You'll see the screener will come up in a few. You just got to give it some time for it to load up. The code is just really code heavy because the algorithm. So what it's doing right now, this algorithm, is it's running through basically every single possible entry, every single minute, and there you go. So this is where I get the list of trades. And then what I do here is I test them in the actual reports, and then I only take the trades with the highest probability. So, I mean, obviously these here don't work very well, but that is typically what I pull up and how I determine which entries I want to take. So I'll have a list of entries here, and then when I have those lists, I'll put the only the best entries on my actual trades to be taken. Yeah, you're new here, so you might want to go back and watch the previous live sessions. I trade live every day, and you'll see like how these numbers here are used and how they come up. But that's how I know exactly what to take because my algorithm here tells me what direction, what exact time to take entry, and the win rate. And I only take the ones with the highest win rate. So here's the 751 entry, guys, if you're looking to take it. The 751 entry, you're going to be looking to take this for a sell. It's going to be with momentum. This actually lines up well with the entry. This has a 60% probability. It doesn't meet my criteria of 65, but this is going to be, I mean, the edge is still there, right? The edge is still there. You still have an edge in the market. It's about a 10% edge. So if you want to take it, I mean, feel free to take it right here. If you don't want to take it, that is it's completely fine. I'm not getting into it because, like I said, it doesn't meet my criteria. So if it doesn't, I'm not going to force a trade here. All right, the trade's running, guys. The trade is currently running right now. 951. Not in the position, like I said, the volatility is a little too high. If this thing pulls back even a little bit, it's enough to stop you out. So not in the position there. And again, I made the proper decision there to skip that trade because if I took it, I would have been screwed and I would have been pissed. But I skipped that trade there specifically. And that's why I avoided that one there today. So, all right, good decision there, guys. Skipping out on the trade. You know, it wasn't part of my list of trades that I wanted to take. The probabilities they were there, but they weren't as good as I wanted it to be. And this here was a good trade to avoid. Let me scroll up real quick. Yeah, Stern said China has drone delivery. Yeah, Walmart actually has outdoor drone delivery here too. They have it in my area. You know, I think they're only doing it in certain areas right now, but a lot of these Amazon, Walmart, they're doing they have this drone that will like go into your backyard and drop off your package or in your front yard. It's pretty crazy. Pretty crazy how the technology is advancing. But all right, guys, so these are the entries for today. The only entries that kind of came up, it was a 654 entry and a 702. The other ones didn't come up. There was nothing here prior to 654, and then the entries over here at 721 and 751, they just didn't meet the criteria for what I was looking for. Let me scroll up real quick. iPhone is asking, can I ask why is there a cap of 18 days only? Can we not go back further or does it crash trading view? So for the screener, this here, it only goes back as far as it can, right? So based off your trading view data, right now I'm on the premium data. I think if I upgrade to ultimate, then I can probably get more data. But because I'm on premium, I'm capped at whatever the chart will give me. And the thing is, it's not even that accurate. I mean, it's accurate, but it's not accurate to the T. So like for me or for you, iPhone, if you want to go down to the reports, you can actually go farther back. So I only do 18 because that's what the screener gives. And I personally only do 18 because I don't really care what happened last month, right? Because the edge changes month by month or week by week or day by day, right? The edge is always changing in the market. The reason why you want to go back super far is to back test the strategy. You want to make sure that it's still profitable, right? So let me go ahead and I'll close this real quick. And let me just show you the data here. So let's see, like, let's just use the I don't know. Let's see. What did I have an entry here that had like a high probability, or just one right now, I guess. So let's just use the 720 or 629 entry, right? So this is against momentum, and I'm just going to show you like using different data here. Uh, so let's do 829. So you want to go back far in data if you're just trying to see if the strategy actually works, right? You want to make sure that it works. Before you actually take a deep dive into the strategy because there's no point if the strategy doesn't have an edge. There's no point in working on it, right? That strategy just sucks. You have to like find a strategy that works, and then from there you go into a deeper dive, or you go into you start to pull more relevant data because the thing is the market's always changing, right? Like what's happening today wasn't what's happening in March, and what's happening in March didn't happen like 10 years ago, right? So like for example here right now with the sample of 19 trades, it is currently at 68%, right? So if you want to see if the strategy works long term, you can go even further. Let's go to 30 days. It still has an edge, right? So this is what you want to look at. You can see here it does 23 trades and it still has an edge. Anything above 33.33% because we're doing a 1 to 2 risk reward shows that it has an edge, right? Um, so with that being the case, let's go back even further, 90 days, updating the report. So right here you can see it still has an edge. So basically over a 3-month period, it shows that there is an edge here. It still wins overall, but it's a little weaker, right? And then let's go over here to the performance. See how there's drawdown periods? That's why you don't care about what happens during, like, you don't want to go too far back, right? Because the strategy is not always going to work. That's why we have to keep updating it because it learns with the market. Like right now it's working. That's why 729 is on the list, right? If we go over here to our previous entries, you'll see that like 729 was actually not on the list here, right? So there was no 729 entry back on October 9th because there was no edge there. And if you want to go back even further, let's go a whole year. So we're going back a whole year to updating the report. My algo is currently running the data. And you can see over here, over a year's time, it did 259 trades. It still has an edge, right? Above a 33%. So let's go over here to the performance tab. See how it has drawdown periods? That's why you're not going to apply this strategy at 629 every single, like next month, it might not be on the list anymore because the edge might die out, right? Like right here, you can see it's in drawdown period for a while, like from like November up until March. So we wouldn't be applying this entry during that time period, but like from here from March, and this is why the quantitative data is really, really important and why it means so much because it shows you that the strategy actually works. So like for example, here between March and May, it was actually working pretty well. So yeah, maybe you'd apply during March to May. Over here from like May to June, it's kind of back and forth. So like maybe not apply it there. And of course, right here, between August or July 31st until October 1st, like basically a 2 month period, you would just not take the strategy because it was just losing a lot right here. And then now again, right here, it's working. It's actually hitting. So yeah, if you want to, Andrew, that was one hell of a losing streak. So see how the losing streak right here loses? That's where you would flip it, right? Because right here, you're doing against momentum. During this period, it might have been better with momentum, right? Let's flip it the other way with momentum. Update the report. And let's see what happens here. So he has a 43% probability for against, and it's a little less, right? So you can see over here, see how it flips? It was on a losing streak between December to March, but now we did the other way, and it's actually winning around this period. So that's why it's important that you guys test it both ways, right? This is how you find your edge in the market. That's why I'm saying 19 is a good sample for now, but you're only trying to figure out if it actually works long term. So like let's go even further. Like let's do the extreme here. So instead of a 1 year period, let's do all of the possible history. Let's go as far back as we can. Let's go to 1979 or 1999, December 31st, 1779, 1799. Most everybody here wasn't born yet at that period, right? So we have the data here. This is how you would understand if the strategy is still profitable and if it has stood the test of time, right? So I went back until the 1700s, basically. This is like in the freaking, I don't know, however long that was, with data. It doesn't really go back that far though. So the data here doesn't actually go back that far. It only goes back to 2022 for the most part, because that's all that TradingView gives me. But pulling all the data here, it shows you that the strategy is still profitable, right? It has 774 trading days. And it shows here that it's still profitable, right? Like I said, anything above 33.33% is profitable. That's where you have an edge because we're doing it once it's your risk reward. You can see over this period of time, it has very nice win streaks. It has drawdown periods. It has win streaks, drawdown periods, etc. So this is why the quant data is helpful because the quant data will show you that the strategy still it actually works. See, if you're trading technicals, you don't know if it works or not. It's funny because a lot of these really well-known traders, they say it's just like astrology, right? It's like if your girlfriend or your wife gives you a horoscope, like that you wake up in the morning, you're like, oh, my horoscope says I'm going to do well today. And then you trade and you blow the account. You're throwing darts at a board basically. In order for you to really know if the strategy works well, you have to have the data behind it. And that's why we have the data here. And this is why it makes sense to apply this specific strategy at the specific time. But then now that you know it's profitable, then you could drill down a little better, right? You just kind of drill down. You start with a big funnel where you're like, okay, the strategy works. And then you start to go deeper and deeper and deeper into like figuring out what actually works and what doesn't. So let's go back to here. Damn, 19 or 17. Let me change the dates here because obviously this stuff here. Barack said horoscopes. What an example, Sean. No, but there's people who trade like that, right? It's crazy. I mean, people do trade like that, but yeah, it's called astrology trading. Like you could look it up. It's like people will trade moon cycles, right? Stuff like that. There's strategies for that. It's crazy. But a lot of these well-known traders, they compare technical analysis to astrology because you can be right or you can be wrong either way. It just depends on how you analyze the market. And if you guys don't believe me, go do your research, right? Go watch videos of a lot of these well-known traders from like market wizards and stuff, and they all relate. If you're only trading technicals by itself, they compare it to astrology. But if you're trading technicals with some other foundation of some sort of back test or quantitative data, then it makes sense because you actually have the numbers. But yeah, if you guys don't have the numbers, I do highly recommend you figure out how to get the numbers because it's going to improve your trading a crazy amount. It's been a game changer for me, and I'm sure it'll be a game changer for you too. But all right, let me see if there's anything else here. Yeah, Stern said TradingView had a moon. They actually do. If you look over here, go to the indicators. They have a built-in moon cycle. Look, check this out, moon phases. So Barack, if you want to add moon phases to your strategy, um, you can. So right now, I think this is a full moon, right? Let me see. Let me go to the settings. Yeah, waxing moon, waning moon, full moon, half moon. Like you can see here that people actually like trading. This is a trading view indicator. It's not a made up indicator. You look at their indicators here that are built into trading view. There's people who actually trade moon cycles. It's real. It's a real thing. So, I mean, yeah, it might be funny to somebody, but if you talk to somebody who actually trades moon cycles, you get ready for an argument because they actually trade this stuff. Um, Moon cycles is okay. I mean, it's okay if you have the data behind it, moon cycles might work. But if you don't have the data and you're just trading moon cycles by itself, then you know, then so be it. I'm not gonna shit on someone's strategy. Like if it works for them, it works. But they probably have some sort of data that they're following. I mean, that's something you could work on, Justice, right? If you want to make a moon cycle back test data to see if it actually works, then there goes your strategy. Now you're selling a course. Now you're selling a moon cycle course. Um, yeah, Kern said, wasn't there a guy that used to use Moon Trade earlier with you on a Sunday? Yeah, Wade. If you guys remember Wade from way back, so he's one of the guys too that kind of left with Aaron. He found moon cycles, and then every Sunday he would have his own like webinar. It's crazy. People paid for that stuff. They paid for his moon cycle analysis. I mean, it is what it is. People will buy anything these days. Um, yeah, it's crazy. Yeah, Rev said definitely gonna work on a moon cycle course. Exactly. But all right, guys, if there's any more questions here, feel free to put your questions in the chat. Otherwise, it's already 8 o'clock, so I think I'm done. Alina, it's my daughter's time now, so I gotta go get her. But yeah, no trades for the day, guys. If you guys took any of the trades that I mentioned for today, I mean, there was two algo entries that actually met the criteria at 654 and at 702. I just didn't take these because of the volatility and the market structure and the volume. But it's fine. I'd rather sit out of a trade than take a trade and not feel comfortable being in the position and being stressed out about it. So, all right, guys, I think that's it for the day. Sam said, "Hey, don't mess with my moon cycle." And yeah. No, funny. I was gonna name somebody that we could apply it to, but I'm not gonna say it because we already got mad at him earlier this week, uh, for um for being a troll. But anyways, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Otherwise, we'll come back tomorrow, guys. Again, if you guys are part of the Discord and you're part of the premium, make sure to look at the algo channel, and I'll post up my trades for the following day. So, all right, guys, have a great rest of your day. If you guys have any questions, hit me up. Otherwise, I will see you guys back here tomorrow for the next live session.